Welcome and thank you for joining us. In today's short video, we're going to review some of the jumbo loan highlights and loan limits for homebuyers in the Sacramento area. If you have questions, please reach out to us 7 days a week by calling 800-962-0677. Okay, first we want to establish exactly what is classified or considered a jumbo loan versus a regular conventional or conforming loan. Currently in Sacramento County, the regular conforming loan limit is set at $766,550. This is for just a basic one-unit property. The loan limits do go slightly higher for multi-unit properties that are 2, 3, or 4-unit properties. And again, this applies to the final loan amount, not the sales price of the property. There are other counties throughout California, like LA County, Orange County, San Francisco area. Those loan limits on the conforming side, they go as high over 1 million to 1.149 million, 825. So those are considered high cost locations and those loan limits are going to be higher. But again, for the Sacramento area, any loan that exceeds the 766 550 for a one unit property, that would be considered a jumbo loan. Okay, so for the borrowers that are financing more high-cost properties that are in the jumbo sphere, those requirements, it depends slightly on many variables like the down payment in particular, but for buyers that are financing the maximum amount, which currently is set at 95% financing, credit scores generally need to be a minimum of 680 in order to be eligible for that. Lower credit scores are often accepted, maybe down to a 660 or maybe even a 640 for home buyers that have a greater down payment of, let's say, a 10% down payment or a 15% down payment. The higher the down payment, the lower the credit score requirements goes. And this applies to really all primary residences only. Single family homes, your regular townhomes, and select condominiums. These programs, they are all fully income and asset documented programs, just like really any conventional loan, where full income, 2 years of tax returns and W-2s, 3 months of asset statements in order to document assets. Again, just like any conventional loan. There are some other options for self-employed business owners, which we're going to look at here in the end. Again, this applies to all purchases and regular rate and term refinance programs. Home buyers that do have significant equity in their home that are looking to do a cash out refinance, there are cash out refinance options that are available, but those are generally limited to 90% loan to value. Both fixed rate, common adjustable rate terms are available, 30-year, 15-year fixed rates, 5-year, 7-year, 10-year adjustable ARMs, 3 years. All those common options that are available with conventional loans also apply here. These programs don't have also any prepayment penalty or early payoff penalties. You can pay off the loan anytime without penalty. Again, just like many conventional loans. There are options, combo loan options, 80-15-5, 80-10-10 combo loan options with a primary first mortgage and maybe a subordinate second mortgage, like a HELOC. Those are often done to prevent monthly mortgage insurance. So there are some options there to get around really the monthly mortgage insurance, or PMI as most people know it. And again, those options will depend on many variables like the credit profile of the borrower, the down payment, and the requested loan amount. Okay, so just some of the highlights, loan to value limits. For the 95% financing, generally these limits are up to 2 million. This can and does change, so we encourage you to refer back to the website because that will likely be more updated. But generally, it's around the $2 million mark for the loan amount, up to the 95% financing. Again, fully documentation, and there are both single and combo loan options. For the borrowers that have a greater down payment, 10% down payment up to 90% loan to value, the loan amounts are going to increase at each increment. So those loan amount limits are generally close to 3 million. Borrowers that have 15% down, again, incremental, the loan amounts are going to even be higher, around 3.5 million. Uh, this applies again to primary owner-occupied residences. There are other options for second homes and vacation homes. Those are generally limited to only 90% loan to value. Also, investment properties. There are options for investment properties, but those generally require a minimum of 20%, maybe 25% for a down payment. Just some other jumbo loan options for borrowers that are self-employed business owners. A lot of times self-employed business owners can have difficulties when it comes to documenting the income that's required in a traditional sense with tax returns and all the things that are required as far as they obviously W-2s and things like that. But bank statement programs are available for qualifying. It's generally limited to 90% loan to value, um, and there are loan limit caps depending on the down payment. But what this allows is for a self-employed business owner to qualify, use their income qualifying based on actual deposits in the business account. So there is going to be either a 1 year or 2 year average formulated of the actual business deposits. This would not require tax returns and all these other things in order to document income. So that's something good for select business owners, is that bank statement qualifying program. Also, veterans. Many veterans, we find this often, that they're unaware that the VA loan, special VA high balance and jumbo programs are available, 100% financing up to $4 million loan amounts. All the same great benefits come as a standard VA loan. Of course, 100% financing, no monthly mortgage insurance. So all the government back guarantee, all those benefits with a regular VA loan. So if you are a veteran and you have your proper entitlement, the VA jumbo, and you want a high balance loan, the VA jumbo loan is an option that, again, we find that many veterans are unaware that exists. But these options, this recently changed a few years ago, but yes, the options are available. If you're financing anything over generally a $2 million loan amount, there will be significant mortgage payment reserves that are required. This is basically the amount of reserves in a liquid or non-liquid account, like a 401k or IRA account, that you have remaining after the closing. So loan amounts over 2 million, we generally like to say, it's a good idea to have probably 12 months of payment reserves that you can document, because again, the risk obviously greatly increases based on the loan amount. But again, great option if you are a veteran and you have your proper VA entitlement and benefits. That's a basic recap. Any home buyers that have questions, again, reach out to us 7 days a week by calling or just visit us at jumbomortgagesource.com. Thank you.